Hello and welcome back. In this video, we will learn how to mark highs and lows like a pro. By the way, in my last video, I have explained what are highs and lows and how can it help you go from a complete beginner in forex to a pro in no time. So if you haven't watched that video yet, you can click the I button and watch that video right now. There has always been a debate about what is the right way to draw swing highs and swing lows. And there are a lot of questions regarding this topic. Like, do we need to consider the wicks or do we need to exclude the wicks while drawing highs and lows? And how do we observe the momentum change? Let's try to understand this one by one. By the way, if you are enjoying this video, a sub would be amazing. So, what is the right way to draw swing highs and swing lows? The very first thing you have to do is you have to look at the chart and find the direction of the market visually. Like, is the market moving up or is it moving down? For that, select whichever time frame you want and just zoom out. Observe in which direction the market is moving in. Like here on odd JPY 15 minutes time frame. If we zoom out, we can see the current direction of the market is up. Now, always remember, if the market is uptrending, you have to look for higher highs and higher lows. And if the market is downtrending, then you have to look for lower lows and lower highs. So in this case, the market is moving up, so we will mark higher highs and higher lows. After you zoom out, the second step is to find the lowest point from which the market started moving up. Now, the third step is to look for the previous lower high. In this case, our previous lower high was this and the lower low was this one. So now, when the market moves up above the previous lower high, we will get our first higher high, and when the market retraces, we will get a new higher low. So this was our previous lower high and this was the final lower low. And when the price moved above this previous lower high over here, we got a new higher high. So this will be our higher high, and after this, when the price moved down and then stayed above the lower low, we will get a new higher low, as this low is higher than the previous low. So this will be our higher low. Now keep on doing this. Look for a new higher high, which would be this one, then a higher low, then again a new higher high, and then a higher low. This time a deeper retracement. So this will be our higher low, then a higher high, and so on. Now again, if we take this small example of downtrend, here we will have to draw lower lows and lower highs. For that, first zoom out and then find the final higher high and higher low. So this will be our final higher high and this will be the final higher low. Now here the market moved below the previous higher low. So this would be our lower low. And when the market moved above, it will be the new lower high. And this will only get confirmed when the price creates another new lower low, which would be right over here. Now when the price goes below this low, we will get a lower low, and when the price retraces, we will get a lower high. There is a very common question my students ask me, like, do we have to consider the wicks while drawing the lows and highs? Absolutely. The wicks represent the lowest and the highest price, and we always have to include it while drawing highs and lows. If you observed when we took the examples to understand the highs and lows, I always included the wicks while marking the swing highs and the swing lows. The next question is how to observe if there is a momentum change or expect a reversal, and is it reliable? Observing momentum change or spotting reversal with this technique is very easy. If the market is uptrending and creating higher highs and higher lows, you have to wait for the market to make lower low and lower highs. And when this happens, you can expect the market to reverse. And if the market is downtrending and creating lower lows and lower highs, you have to wait for the market to make a higher high and a higher low. And this can confirm that there is a momentum change in the market and the market can now reverse. Like it happened over here. The price was creating continuous lower lows and lower highs, and then finally from here at this point it could not create any new lower lows and it created a higher high and a higher low instead. And then the price started moving up. Now talking about the reliability of this technique, it works best if you have mastered it, but you also need to have some other confirmations, because price sometimes create a deeper retracement in form of a short trend and then continues to move in the previous direction, like it happened over here. The price was creating a series of higher highs and high lows and hence was uptrending. But then from here at this point, the price could not create any new higher highs and we would have thought that the trend has changed, but it was just a deeper retracement. These types of traps are very common and you will get used to this only when you practice this over and over again, or when you combine this technique with any other technique. So make sure you practice it as much as possible, as this simple basic thing will help you a lot when you use advanced strategies. Thank you so